Hello, friends. Welcome to Nirmal Bang. I'm Piyush Jain, and today we are bringing to you a new company, which is very soon going to get listed on the bourses. The name of the company is IREDA, a well-known company from the perspective of financing in the renewable energy, and a company which has really grown its loan book by leaps and bounds over the last 3 years. The growth has been stupendous in the loan book, and now perhaps it's the right time for the company to come and get listed on the bourses and create wealth for the investors and shareholders. Let me welcome now the management, Mr. Pradeep Kumar Das, the CMD of the company, and Dr. Vijay Kumar Mohanty, the Director of Finance of the company. Gentlemen, welcome to the show.
Thank you.
Thank you.
Pradeep ji, let's first start from you. Help us understand what's the business model of the company. Obviously, it's NBFC, so it's making money through the spreads between the funds raised and also the funds which are lent. But help us understand what is the core area of the company where it operates in and how it makes money.
Thank you. Thank you very much for inviting us for this discussion, which is very appropriate because, as you said, our IPO is going to open from 21st and 21st, 22nd, 23rd. And the price band has already been also announced between 30 and 32. We are the largest pure play green finance company in India, working in this space since last 36 years. And renewable energy financing, energy access, energy efficiency, and new sources of energy. We finance all kind of sectors. And in our country, last 9 years, renewable energy development is taken a quite big pace. The speed in which we have developed in last 9 years in the country is phenomenal. If you take example of solar only, 25 times solar has grown in last 9 years. No other sector in any economy perhaps has not grown in that pace. And look at IREDA. See, we are 36-year-old. 33 years back, our loan book was 23,000 crore plus. In 3 years, we have added 24,000 crore loan book to our portfolio,
So double the loan book.
more than double.
Hmm.
That is not important. That is very simple because sanctioning disbursing is very easy if you have sound system in place, but getting the loan project healthy and executed and getting the recovery. So our recovery has been improved also quite a lot. We had NPA of around 2,400 crores in March 20, which has brought down to 1,500 crore by March 23 as well as September 23, resulting our net NPA reduction from 7.18 to 1.65. So any investor's concern, not only investor, even developer concern, if the NBFC doesn't do well, the NBFC rating will go down. If the rating goes down, the borrowing cost will go up. If the borrowing
Yes.
cost goes up, then the lending cost will also go up. So it is in the interest of the developer that the lender also to be retained at good rating. What changes we have brought in our business process, business model is we finance the entire range of product and services in renewable, starting with project conceptual stage to post commissioning and closure. All kind of support and handholding we do. In fact, we have played a motherly role of financing or renewable sector since 36 years. As I said, last 9 years, renewable has grown quite a lot in the country. So
Yes.
also the sector like wind, solar, hydro, which were emerging 25, 30 years back, they are
Hmm.
established. And IREDA has proven track record, unique nature of transitioning the sector from emerging to established. And in the time to come, we are going to play again similar kind of role in handholding the RE development in the country. So our motto is not only to finance, we have to finance, we have to develop the sector. Now, with the commitment and of COP and mandate of our Honorable Prime Minister and Government of India, we are committed to have 500 gigawatt in the country, renewable installed capacity. As of now, around 182 gigawatt is there. So 320 and odd gigawatt additional RE installation is required in the country. And we are quite hopeful that India will be reaching that target even before 2030. Why?
Sure.
Because the new and other emerging sources like green hydrogen and its derivative and others, which is requiring additional RE installed capacity of 125 gigawatt, that is not considered in this 500 gigawatt.
But
Therefore,
sir,
we are of a firm opinion that India will be reaching the target, and huge amount of business opportunity will be available for the RE financer in the country.
sure.
And
Apologies for jumping in between, but as you say, the sort of horizon, the future looks extremely bright for a company like yours, which is lending to the renewable energy, the green energy. It's huge scope. But from this perspective, sir, one question arises that while the companies will keep coming to you for raising funds, so it's very easy. Demand is huge. How do you raise funds? How actually? What is the cost of funds, and from where you're raising funds?
see, if you see, our current resource profile is 75% domestic and 25% forex. The moment we say forex, then the concern comes: what about the currency risk and foreign currency management risk and all? Fortunately, we have 81% hedged. So our
Mhm.
forex management is also quite strong. And if you see 3 years back, this was completely different. 57% was forex and 43% was domestic. Last 3 years, domestic market was so competitive vis-a-vis the landed cost of those forex support.
Yes, yes.
Despite of having forex line of credit, we have not adhered to drawing that. Despite paying the commitment charges, we have looked for that arbitrage wherever domestic, as long as wherever domestic lending was competitive, we have gone for it. And we have resorted to various alternate mechanisms of institutional bonds, bank loans, short term finance, etc., through which we have reached to the minimum borrowing cost among the NBFC space who are working in this area.
Sure.
Definitely, when we talk about interest rate in case of established RE is very competitive because
Mhm.
when I'm saying established, that is, but if you take example of solar, typically which requires 6 months to 1.5 year, and post commissioning, the project gets de-risked once they conform to the pre-decided, pre-appraised techno-commercial parameter. Post commissioning and testing of 1 year post commissioning or 1.5 year post commissioning in case of wind, solar, and hydro, respectively. So once a project is de-risked, then the asset is quite safe. And if you see our loan book of 47,000 crore, which we added 24,000 crore in 3 years, almost 80% of our generation assets are commissioned asset, which
Okay.
resulted lesser provisioning. And this is again uniqueness. If you look at others, they have around 70%, those who are largely into thermal space. Now again 70% there, and we have around 48%. So when we are having lesser provisioning, our bottom line is getting benefited. Though the NIM appearing to be competitive or being slightly lesser, since we are doing a developmental role, supporting the sector to develop, in this COVID period, we had strongly supported our developer, and resulting not only we enhanced the business but also ensured no new major NPA emerged.
Sure.
So that
Sure,
is
sir.
what.
Now, absolutely, sir. I take your point. Let me now take this to Dr. Bijay also. Dr. Bijay, what has been the standard NIMS, net interest margins for the company on an average basis over the last 2 years?
Last NIM is around 3 to 3.2, and spread is 2 to 2.22. And we are
Okay, sir.
maintaining healthy spread and NIM for the last
Great,
three,
sir.
4 years. We will continue same in future.
Sure, sir. And what has been the average cost of funds?
Cost of fund is was 6 to 6.63 last 3 years, and this year the rate of interest has been increased in from all funds, and at the same time to maintain a healthy NIM and spread, we have also increased our lending rate from past July 2023 to maintain a balance.
Sure,
Just to
sir.
add, just to add to what Dr. Mahanti said, we are
Sure.
resorting to further cheaper sources of raising. Like as on today, we do not have 54 EC bond allocation with us.
Uh-huh.
Whereas if you see other NBFCs, they are having. Now we have requested Government of India. Our ministry has already forwarded request to Finance Ministry. So we are
Mhm.
hopeful of getting an allocation in this year's budget. Once we get 54 EC allocations and post our IPO, will be widely known among Indian citizens also in general.
Mm.
Right now, largely our lender and borrower knows better, but post IPO will be known, and we'll have. We are confident that we can be successful in raising through 54 EC. Apart from that, in renewable, as I said 3 years back, our loan composition or resource composition was 57 forex and the domestic. All these major development agencies and multi MDBs, they have supported us to translate this emerging RE to established RE. In the past, they handled it. Today, because of the global interest rate scenario, those are not becoming cheaper. What?
Mhm.
Because major component in that is the hedging cost. Around 350 to 450 bips we have to spend towards hedging, which is resulting the landed cost to be higher. What we have planned in place now, already we have taken the consent of NOC from Niti Aayog and from DIPAM, and we have
Mhm.
also given our request to RBI, which is under process. So we are hopeful of getting that. Once we get, we'll open the office in Gift City. What will enable us and the developer is we can borrow in forex and lend to them in forex also, so that natural hedging will be there. Those
Mm.
developers who are setting up overseas project, particularly in this solar and its component manufacturing, because of the global market opportunity, many of our
Mm.
existing developer has already approached us and requested us to have them forex component loan, so that they can save the hedging part of it, cost of it.
Sure.
And apart from that, when we are envisaging the newer sources in the future, green hydrogen and its derivative like green ammonia, etc., fair amount of investment, the Indian developers, our borrowers, they have started looking into setting up the manufacturing capacity. So their inflow will be in forex. So what we have planned in place for them also, that we will be
Right.
raising loan in forex for them. We can lend them, and their inflows will be in forex. So natural through natural hedging, around 350 to 450 bips can be saved, and fair amount of that saving can be shared to with them.
Sure, sir. Um, Now, coming back to Sir Dr. Vijay, so what has been the average tenure of the loan on both sides? Like average tenure of the funds which you're raising and average tenure of the loans which you're lending?
Earlier, we used to lend for 7 to 10 years. Now we have extended up to 20 years with a moratorium of 3 to 5 years. Similarly, we also take loan on short-term loan basis, also on long-term basis. We take short-term loan for 1 year and 3 years, and long-term loan for 10 years.
Now, even certain loan we have taken for 15 years, like bonds when we raise, typically in Indian market, you cannot go beyond 15 years. And
Hmm.
certain line of credit we have with us, which is 20 years, 30 years, and 40 years. Like we have financed to by the Ultra Mega Solar project for this solar park in MP. That is a World Bank line of credit. So that's a fairly longer period. So what we do, we try to have that mix and match, not only cost, also that front. On an average, it used to be 10 to 12 years, but off
Hmm.
late, the solar, wind, hydro, these loans are going up to 80% of the project life, typically up to 20 years. But we are trying to maintain a balance of our ALM through various means. And in the emerging one, like ethanol, compressed biogas, and
Mm-hmm.
even e-mobility and in its infra, where the typical construction period is almost 1 to 1.5 year, and the loan tenure is 7 to 8 years. So that will average it out. So we'll be having in the range of 12 to 15 years in the longer tenure also in the time to
Noted.
come. So that will
Noted, sir.
enable us to have a mix of short and long, and accordingly we can balance it out.
Sure, sir. Uh, does it imply that it's a conscious strategy from the company to maintain NIMs around 3%?
Um, right now our NIM is 3 plus,
Mm-hmm.
and in already from July onwards we have enhanced the interest rates, particularly in the emerging
Okay.
space, and we have fair amount of NIM uh, in emerging vis-a-vis the established area, which is quite natural because in
Right.
emerging you need to have provisioning coverage more also. In established, you may not require more once it is commissioned. So, in
Understood.
our strategy to have a balanced loan book portfolio of at least
Mm-hmm.
50-50, around 50-50, subject to market condition and market requirement. Since we are the primary and focus agency for
Mm-hmm.
this kind of activity, for developing the sector, and we are the extended arm of MNRE, and we
Mm-hmm.
always we are involved almost in the policy stage to entire closure of the scheme. So therefore we have a responsible role as well as competence and capability to
Understood, sir.
sector.
Absolutely. One question I want to ask you, Pradeep from the perspective of this IPO, how much funds they are looking to raise, and what should we expect as a normal leverage ratio for your company? For example, suppose if you've raised 1,000 crores, are you deploying leverage of 3 times, 4 times? How much you're going to lend over that 1,000 crores? So help us understand how much you're raising funds and what sort of basically we can expect in terms of loan growth.
If you see March, our capital gearing was 6.7, and
Mm-hmm.
RBI has already recently came out with a circular to go maximum 7 times.
Mm-hmm.
So we'll be keeping within the RBI's limit always, because we are today considered one of the best governed NBFC in government space as far as compliance and governance of RBI is concerned. We are fully compliant. And despite a larger part of our loan book, that is 75%, is coming from private, despite that 100% is renewable and new sources where challenges are more and quicker decision is to be taken. And we have a robust project review monitoring division in place, which he created 3 months back, 3 years back, and we have a very robust project rating and assessment process in place, which is proprietary to us, because that we have gained and developed in last 36 years of experience and expertise. And more you deal with new and emerging, more and more you deal with private sector project, you will gain much more expertise in the time to come. And we have already exhibited that in last 36 years we have financed more than 1 lakh 7,000 crore, and our cumulative write-off is hardly 200 crore, 203 crore. So which is confirming that our system process are in place. Apart from that, since 3 years we are focusing on best quality corporate governance. Two examples I will give. You have not asked, but that will give you a lot of answer to other questions also. We are the perhaps only agencies of such kind who is doing every quarter full audit of accounts. And we are quickest in publishing. Even our September result, full audit we submitted in 23 days. I doubt whether any agency has done it. And last year, if you see, not only we published the audited annual result in 25 days, but also conducted annual general meeting in 90 days. And in India, probably TCS and Infosys did this year in 88 and 89 days. They are considered to be most good governed company as far as corporate governance standards are concerned. But
Sure.
if you compare with them and us, they are not subject to government audit. We are subject to that, and which requires 60 days. Despite that, we
Mm.
did 90 days. Then relative comparison you can do. And we have complete focus on best quality corporate governance, which will not only enable us to give best quality service to our develop, which will also enable us to sustain the rating, through which we will continue to borrow at a cheapest rate,
Sure.
and we will continue to support the developer. And through
Sure.
this quarterly meets, we do again every quarter borrower meet. We try to understand the challenges from the sector. Through that, we are also developing their corporate governance standards, so which will enable them to retain their rating and sustain their governance levels.
Very nice, sir, and very highly required in the markets like this, especially for financial companies, perhaps this creates a bit of premium also in the market in the eyes of investors. So I
Your
think
another
our viewers
question,
will also really like it.
your
Please, you
another
were saying.
question was your another question was how much we are going to get from IPO. We're going to get around 1,200 plus crores. So price 30 between 30 and 32, and if we get even um, 32, it will cross 1,200 crore, and we are quite the way we have interacted during our roadshow. We are quite people are very optimistic and people are very keen because this is such a company which is not required only for making profit but also developing new and renewable sources and
Sure.
decarbonizing, which is very much essential for giving our next generation a sustainable earth.
Absolutely, sir. So, but I'm just clearing one point here. 1,200 crores, you're raising funds, average leverage of 5 to 6 times, 6 times, as you just said. So, will it be fair or right to say that with this amount of funds, you can actually give loans of 7,000 crores easily? That could add to your loan book. And perhaps when that loan book, that amount crosses, then perhaps you can raise amount from the market in any form. So, 7,000 crores, is that something a fair estimate in terms of loan book increase?
So if you see 3 years, when we have announced 24,000 additions and
Hmm.
almost 2 years, 40,000 crores disbursement we have made. And
Okay,
against only 23,000 crore loan book in 33 years. And our disbursement used to be happening in the range of 8 to 9,000 annually prior to
sure.
March 2020, which has gone up to last year more around 21,900 crore. If you see the rate in which going, our capital is almost fully leveraging, and we'll continue to not only fully leverage but
Uh,
also will earn fair amount of fees based income, because beyond fully
right,
leveraging, what we will do, we have
right.
talented manpower and resource with us. We can go for joint lending and we can earn
Okay,
fair amount of fees based income, which will be supporting our bottom line also directly.
right. So from that perspective, what is the last quarter disbursal amount?
Last quarter disbursal amount, I think cumulative we have gone up around up to September around 7,500 plus.
Is this 7,500 crores from April to September, or it is from July to
April to
September?
April to September.
Okay, so now we're almost talking about annualized 15,000 crores. So that sort of pace is looking strong.
No, I'm
And
sorry. No. Sorry. I think that will be a very big mistake if you assume that. If you see, 50% of our disbursement of the annual disbursement happens in the fourth quarter.
Okay. I understood. I think
Yeah,
this is a good point. Our viewers should remember the
yeah,
fourth
yeah,
quarter is the bulkiest quarter, and
yeah,
perhaps the 50% comes in the first 3 quarters. The first two
yeah.
quarters, company has already done a fair sort of amount of 7,500 crores. So perhaps our viewers will take note of that. I think as we come towards the end of this conversation, perhaps we've talked about green energy, perhaps a huge scope there, companies lending in that. We talked about NIMs, which remain 3 to 3.5%, as we were just talking about. Perhaps companies maintaining a sort of tenure on both sides, raising funds and also lending funds. And we also talked about that basically the loan book growth actually remains quite strong. So, and also with this listing, perhaps your fundraising options will also widen a lot. So perhaps that will add sort of an option to you. Taking note into account of all of that, perhaps it's time to sort of extend all the wishes from our viewers, from our side to you for a very successful IPO, and also a company which is actually presenting a very good corporate governance. Perhaps the market will take note of that. But from our side, all the best wishes to you, sir. And thank you for coming on our show.
Thank you very
Thank you very
much,
much.
and have a good day ahead.
And dear viewers, hope you enjoyed this, learning about the new company. And for now, it's a wrap on the show.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from Nirmal Bang.